The main objective of our group in completing this assignment is to ask case study 1, which has been developed by a lecturer, Mrs. Amaria binti Jamil, to apply the basic of accounting HFT10203. Our group consists of 5 students which different educational background, stated location, and district. Even though we don't have a lot of free time, we still try to schedule meeting either in person or online. To make it easy for us to product assignment quickly and complete the assignment that have been given to us. This assignment teaches us the basic of accounting required from a business or firm. For the introduction, accounting serves as a tool from getting, summarizing, reporting, and evaluating economy data. An accounting system must be great to accomplish this design system as accounting data to satisfy us need. A report can be generated and the decision from various departments can be made based on them on the system has been designed. Everyone benefits from having a solid understanding of accounting principles since everyone has accounting in some capacity. For example, if a hospitality company is required to audit and submit daily financial report to its management. This business manages thousands and or hundreds of transactional every day. In addition, restaurant must keep careful record of all financial information.
Hello, my name is Fernandez. I will present about general entry. For the October 1, cash, computer, equipment is 500,000 and 100,000, and debit and capital is 600,000 in credit. For October 2, rent expenses and cash. And rent expenses is 15,000 in debit and cash is credit 15,000. October 4, equipment is 12,000 in debit and account payable is in credit 12,000 also. October 8, cash and service income. Cash is 32,000 in debit and service income is 32,000 credit. October 10, account receivable is 27,000 in debit and service income in 27,000 also in credit. October 12, equipment and cash. Equipment is 8,000 in debit and cash 8,000 also in credit. October 15, salary expenses and 6,200 in debit and cash and 6,200 credit. October 18, cash and account receivable. Cash 15,000 in debit and account receivable is 15,000 credit. October 25, account payable and cash. Account payable is 12,000 in debit and cash and 12,000 credit. October 28, drawing and cash. Drawing is 500 in debit side and cash 500 in credit side. October 30, cash 40,000 and account receivable 40,000 in debit side and service income is 80,000 credit side. For October 31, salary and cash. Salary is 700 in debit side and cash 700 also in credit side. October 31, accrued expenses in 5,600 in debit side. Utility bill 5,600 in credit side, and the total is credit is 840,000, and also in debit is 814,000. That's all in a journal entry. Thank you. Next, I will present about ledger. In the cash account, debit side is October 1 capital 500,000, October 8 service income 32,000, October 18 account receivable 15,000, October 30 service income 400,000, and the total is 587,000. Okay, for the credit side, October 2 rent 15,000, October 12 equipment 8,000, October 15 salary 6,200, October 25 account payable 12,000, October 28 drawing 500, October 31 salary 700, and the last one is October 31 balance CD 544,600, and the total is 587,000. Okay, for the November 1 balance CD balance BD is 544,600. Next, I will present. Next is account receivable. In the debit side, October 10 service income 27,000, and October 30 service income 40,000. In the credit side is October 18 cash 15,000, and October 31 balance CD 52,000, and the total for the both of the credit and debit is 60,000. November 1's balance BD is 52,000. Next is account payable. Okay. In the debit side is October 25 cash 12,000, and the credit side is October 4 equipment 12,000, and the total of the credit and debit is 12,000. Next is capital account. Okay, in the debit side is only October 31 balance CD is 600,000. In the credit side is October 1 cash 500,000, and October 1 also computer equipment 100,000, and the total above is 600,000. And November 1 balance BD is 600,000. After that, rent account. In the debit side is October 2 cash 15,000, and the credit side is October 31 balance CD 15,000 also, and the total of the two is 15,000. November 1's balance BD is 15,000. That's all. Thank you. Okay, after that is equipment account. In the debit side is October 1 capital 100,000, October 4 account payable 12,000, and October 12 cash 8,000. In the debit credit side is October 31 balance CD 120,000, and the total of the two credit and debit in equipment account is 120,000. Okay, for the November 1 balance BD is 120,000. Next is service income account. In the debit side is only October 31 balance CD 139,000. Okay, in the credit side is October 8 cash 32,000, October 10 account receivable 27,000, October 30 cash 40,000, and of October 30 also account receivable 40,000, and the total of these two credit and debit is 139,000. And November 1's balance BD is 139,000. Next is salary account. In the debit side is October 15 cash 6,200, and October 31 is cash also 700, and the total is 6,900. For the credit side is October 31 balance CD 6,900, and there's a balance between credit and debit. And the November 1 balance BD is 6,900. For the drawing account, in the debit side, October 28 cash 500, and the total is 500. And also the debit side, October 31 balance CD is 500 also. And the November 1, the balance BD is 500. Okay, next is utility bills. For the debit side is October 31. Okay, there's accrued expenses 5,600. Okay, the credit side also is October 31 balance CD 5,600, and the total of the two debit and credit is 5,600. And November 1's balance BD is 5,600. Next is accrued expenses. Accrued expenses in the debit side is October 31 balance CD 5,600, and the credit side is October 31 utility bills 5,600, and the total of these two credit and debit is 5,600, and November 1's balance BD is 5,600. Okay. For the next part is trial balance. For the cash is in debit 544,600. For account receivable is 52,000 in debit side. Capital in credit side is 600,000. Rent expenses is 15,000. Equipment is 120,000 in debit side, and service income in credit side 139,000. Salary in debit side is 6,900. Drawing in debit side is 500. Accrued expenses is in credit side is 5,600, and utility bill in debit side is 5,600, and the total debit and credit is balance. The total is 744,600. That's all. That is statement profit and loss. In the particular RM, service income in 139,000. The gross profit is 139,000 less salary expenses, rent expenses, and utilities expenses, and the total of this less is 27,500. And the net profit after gross profit minus the less expenses is 111,500. That's all. Part in the transaction is statement of final position cash. Okay, for the fixed asset is equipment 120,000. Current asset is account receivable 52,000. Cash is 544,600, and the total current asset is 596,600. Less current liability is accrued expenses is 5,600, and the total asset is 711,000. Financed by capital 600,000 less net profit 111,500, and the drawing is 500. The total of the net profit less net profit plus drawing is 112,000, and the total is 711,000. That's same with the total asset. That's all. Thank you.
Useful of statement profit and loss. There are two statement of affairs, one at the beginning of the accounting period, which is known as the opening, while the other one is known as the closing. It will provide information related to capital at the beginning and at the end of each capital. Now we go to loss report. We will see the profit and loss report will be slightly different from one business to another. But the following are some common components of income. The first one is revenue. Second is cost of goods sold. The third one is operating income. And the last one is other income and expenses.
The usefulness of the balance sheet statement. A financial statement called a balance sheet gives a quick overview of a company's financial situation at a certain point in time.
unessential part of financial reporting. It provides a summary of a company's assets, liabilities, and shareholders' equity. There are various uses for the balance sheet statement. Here I stated 7 points of them. The first point is financial condition. The balance sheet aids in understanding a company's financial condition by investors, creditors, and shareholders. It gives a general summary of the company's assets, liabilities, and remaining value that shareholders can assess, which is equity. My second point is liquidity assessment. By listing a company's current assets, such as cash and accounts receivable, and current liabilities, such as accounts payables and short-term debt, the balance sheet aids in the evaluation of a company's liquidity. Users can evaluate whether a company has adequate short-term assets to meet its short-term liabilities by comparing these numbers. My third point is solvency analysis. By looking at a company's long-term liabilities and equity, the balance sheet can be used to assess its solvency. It shows the split between debt and equity financing of a company's assets. This data is essential for determining a company's capacity to fulfill its long-term financial commitments. My fourth point is investment decisions. Investors use the balance sheet to assess the financial stability of a firm and come to well-informed investment conclusions. Investors can evaluate the company's general stability, financial leverage, and growth potential by looking at its assets, liabilities, and equity. Number 5. Creditworthiness assessment. Before giving credit or making loans to a company, creditors such as banks and suppliers assess its creditworthiness using the balance sheet. To gauge the degree of risk associated with lending, they examine a company's assets mix, debt to equity ratio, and cash flow generation capacity. The next point is performance monitoring. The balance sheet aids in tracking the monetary development of an organization. Over time, stakeholders can spot trends and changes in a company's financial structure, such rising debt levels or shifts in the asset mix, by comparing balance sheet from several time periods. My last point is basis for the four other financial statements. The income statement, cash flow statement, and other financial statements, such as the balance sheet, are all closely related to one another. In order to reconcile and analyze these statements and have a thorough picture of a company's financial performance, it provides essential information. To conclude, the balance sheet statement is an essential instrument for determining an organization's financial status, selecting investment, determining its creditworthiness, and keeping track of its financial success. It provides useful information about a company's assets, liabilities, and equity, assisting stakeholders in making decisions about its financial situation and future prospects.
Conclusion. In conclusion, accounting is referred to the process of the reporting and communication financial information about an individual or organization. Simple terms. Accounting is how a business record financial information. It's help accountant or everyone else tasked with accounting activities. The benefits that can get from studying accounting is to be able to manage your own finance more effective. Number 2 is can get understanding of current events. Number 3, can record information systematically. And this account system is important for those who have no knowledge of accounting
to be able to produce financial report easily and quickly.